This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. President Trump seeking a delay for his planned summit with China's Xi Jinping, saying the Iran war means he's needed in Washington. Asia stocks are set for gains after Wall Street gets a boost from a slide in oil prices amid hopes more oil tankers may be able to move through the Strait of Hormuz. The RBA expected to hike rates again today as the conflict refuels inflation. And Nvidia CEO Jen-Hsun says he expects $1 trillion in sales through 2027 from the company's flagship AI processors.
Yeah, leadership in today's Wall Street session very much focused on technology stocks, so we'll be watching those across the Asia session as well. But it's really about that risk-on sentiment with oil prices declining, those hopes that we might see more shipping across the Strait of Hormuz. Take a look at how we're trading right now, because Nikkei futures are setting up for some downside. We have already seen 3 sessions of losses, but we're also contending with a very difficult week for Japan. We do have Prime Minister Takaichi speaking with President Trump at a time when even this morning local media were saying that the U.S. is asking for maritime support in Iran. And of course, we do have the Bank of Japan policy decision. Another policy decision that we're watching today, of course, is the RBA expected to implement a back-to-back hike given these inflationary concerns. The price of oil is a key issue here, but we had seen those price concerns even being established before the war in Iran broke out about 2 weeks ago. And you can see the offshore yuan holding steady after some gains and advancing for the first time in a few days, Heidi, given that we are now seeing broader dollar weakness.
That broader dollar weakness is going to play out when it comes to, of course, a number of these Asian currencies, given that supremacy we've seen in the haven trade. Some of these reversals that we're also watching out for, obviously, is that return of risk appetite. Take a look at what we're watching when it comes to that trading across US stocks, which will give the positive lead to Wall Street as well. So much of this has been on the pretty modest recovery that we've seen in oil prices, the more optimism that we could see that choke point of the Strait of Hormuz seeing some improvement. But there's still a great deal of uncertainty, and Shery, so much of that uncertainty also coming from China-US relations right now.
Yeah, President Trump now saying that he's requesting Beijing delay his planned summit with Chinese leader Xi Jinping. Trump saying that it's important for him to remain in Washington to oversee the Iran war.
I don't know. We're working on that right now. We're speaking to China. I'd love to, but because of the war, I want to be here. I have to be here, I feel. And so we've requested that we delay it a month.
Let's bring in Bloomberg Politics editor Laura Davison joining me today here in Tokyo. And Laura, of course, the president is saying is because he needs to be in Washington. We have heard those logistical issues with the preparations for the summit as well. At the same time, he's been requesting more help, right, in unblocking the Strait of Hormuz. Could this signal broader tensions?
This could. Trump, is really out on an island right now. He's been requesting help. He's singled out China in particular, saying, look, China, you get a lot of oil from the Strait of Hormuz. You should come protect us. He even said this is your territory. This is other countries' territories, not our job. So Trump, there's concern in the White House that going into the summit, which is scheduled to happen in just 2 weeks, Besant, has just been meeting with top Chinese officials in Paris to walk through some of these things, that if they go into the summit, that they're not going to get the optics and the deals coming out of this that they want. This summit will inherently be about Iran, sort of that being the top issue in the globe. If it proceeds in 2 weeks, and I think they're worried that they're not going to be able to get the outcomes and the commitments from China that they want if they go ahead and have this. This, of course, will be a win for the Chinese because they have wanted to delay this. They wanted to have more time to prepare. The U.S. was sort of throwing this together. Slapdash Chinese officials, weeks ago had requested to do this later in April, so they may end up getting what they want in a broader discussion, on diplomatic issues, on Taiwan, some of these issues that, frankly, neither side was really prepared to go in and talk about.
Yeah.
Now they have more time.
I mean, the state visit would have been huge, right? The flash and flare that Beijing needs to prepare for such a summit. But you're right, the distraction would be the Iran war. How's that going at this point? Are the U.S. and Iran at least communicating? Do we know there's been even misunderstandings from both sides?
It is really unclear. Trump has continued to insist that the U.S. is speaking with the Iranians, that the Iranians have reached out, that they want to make a deal, but he doesn't want to make a deal right now. The Iranians for weeks have continued to say, look, there is no communication. We are not talking. We're not negotiating with the U.S. This is a war that is ongoing. We're not looking to capitulate here. This is probably both a combination of posturing from both sides, but also we've seen Trump in these situations try to project out into the world what he hopes is happening or what he hopes might happen if he suggests it. kind of has really changed his mind. At the beginning of the war, he said, look, I want to make a deal with the Iranians, then said, no, I don't want to talk to them. Now saying he does, now saying they want to talk to him, but he doesn't want to talk to them. So this has all been very confusing and sort of in public real time, Trump sort of figuring out what his most advantageous position is.
And there is a sense that this administration, that this president is perhaps feeling a little bit spread thin here, right? There is an active war. There's also the active war in Ukraine. There's the issues with Cuba, which he says he wants to deal with, presumably after there's a bit more certainty on Iran. And we've just talked about the China-US relations as well, not to mention the domestic pressures going into midterms.
Yes, Trump has an incredible amount on his plate, and noteworthy that American voters, U.S. voters, when you ask them about Iran, Cuba, Russia, Ukraine, any of these foreign policy issues, they almost don't even register at all in the polls. What American voters are concerned about are prices, inflation, jobs, all these economic pocketbook type issues. But what you see Trump really spending his time on are these foreign policy issues. In Cuba in particular, we've also seen him in the past couple of days processing in real time what he's thinking about. He just today, the New York Times reported that he wants the Cuban president to step down in order to have negotiations. He's mused about taking the island or just working with them. But the administration has sort of taken the position that if they continue to squeeze Cuba, that the island's governments will fall and that the U.S. will be able to take it over and sort of have it as a proxy state.
Yeah. Bloomberg Politics editor Laura Davison with all of these challenges that the Trump administration is currently dealing with. And of course, the market's also dealing with the repercussions of the Iran war. But also, we got some more positive news coming from the tech sector today that lifted sentiment across the S&P 500. Nvidia CEO Jen-Hsun saying that his company's AI processors will drive $1 trillion in sales through 2027. He made the prediction as Nvidia unveiled new products at its annual showcase. Let's bring in Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. So, Mandeep, if you add all this up, it could be that $1 trillion figure. But how significant is this, given that the markets were sort of expecting it already?
Yeah, and look, Nvidia did give us a backlog, 2-year backlog number where they had, a $500 billion figure through 2026. Now this kind of gives visibility to 2027 number. And like a 3-year backlog where if you add up their revenue for 2026, it will be somewhere around $375 billion. And then 2027 could be closer to $500 billion in revenue. And that's how he's framing that $1 trillion number. And there is some upside to consensus numbers. But in the end, you have to still look at the overall gross margins. And that's where, market probably would need more clarity on what margins Nvidia will have in 2027 when they have that $500 billion number.
So not a major acceleration in sales growth in that. Does that add to the broader skepticism and fears over the sector?
No, I think it gives you more visibility in terms of what the hyperscalers are going to do in 2027, because one of the risks for NVIDIA is hyperscalers may end up having a digestion phase at some point. Now, up until now, we had clarity through 2026 when hyperscalers will spend almost $650 billion in CapEx. This kind of extends it further to 2027, which will at least have a 25 to 30% growth in overall CapEx from hyperscalers, because NVIDIA did say they expect, 60% of that $1 trillion number to come from hyperscaler CapEx spend. So from that perspective, it does increase that visibility through 2020.
Mandeep, what are the early signals from the demand side of things, given that now the markets are concerned about all of this borrowing that's taking place around hyperscalers, including the pressure on private credit because of their exposure?
Yeah, you're absolutely right. So there is definitely a focus around private credit, and that's where that, the circular funding element in terms of NVIDIA, investing in some of the neo clouds, that comes into play. And basically, what they're saying is because of the reliance on hyperscalers, this 1 trillion number is almost certain, because you're not really relying on the private credit to, prop up that $1 trillion number. It's coming from hyperscalers who still generate a ton of free cash flow. And that's what he's saying in terms of the visibility that he has through 2027.
Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh in New York there. Well, analysts say Nvidia's outlook is exactly what investors wanted to hear, although it failed to dramatically exceed expectations. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. So how much does this sort of add to some much-needed positivity for the market?
Well, I think what it did was enhance some positivity that was building, with decline in oil prices overnight. The markets seem to be clinging to the idea that, well, look, a couple of ships got through Hormuz. I think in the background it actually helps that the US has been talking much less about destroying targets within Iran. Pete Hegseth hasn't been out there talking about warfighting quite so much. So there are some signals there that the US is at the very least, is leaning more towards trying to reach some sort of an accord, or at least take the temperature down in the war. So you had that going on in the background, and then Nvidia reminded people that, hey, the AI boom is still a thing. We're still positive about how much we're going to be able to sell, and ideally that would indicate that the companies that are going to buy Nvidia's product are going to be able to make extra profits by boosting their AI development. So that remains on track. If you still take that as a message that has some carry through, then equity prices have fallen. So you're looking at the potential that you're getting to buy the same AI story for cheaper than you could a few weeks ago. So I think that did help somewhat. It was noticeable, though, that Nvidia shares initially bounced a lot more before declining as people came to the realization that this is mostly in line with what we were looking at before. It's not some major step up.
The return of the inflation story, the energy story still remains front and centre. The RBA will be interesting as the first to make that policy decision since the war. Notwithstanding that the economy here is quite different to everywhere else in the world, does it have implications for G10 bonds?
Oh, absolutely. The RBA, before the war came along, the RBA was definitely leading the way for central banks who were pivoting towards a more hawkish stance. In a lot of instances, that meant that they were more definitively saying, we're on hold, or you already had doubts brewing that the Fed could go on cutting rates at the pace it had been expected to cut rates. I've got a story out today. I'm looking at some of this, and I got a chart showing how metals were climbing in the latter half of last year at a time when crude oil was trending down and was about to hit, for WTI, the lowest since early 2022. So you already had that concern about inflation brewing from metals. Now we've got oil, and we've also got what's going on with LNG and a whole lot of other supplies. So that inflation concern is very real for central bankers, and the concern for bonds and then for other assets is that either central banks are going to have to hike rates the way they're priced to, and the RBA is going to be your first signal on that, or the demand destruction is going to be so severe that central banks go, oh, we shouldn't be hiking rates because the economy's falling over. Neither of those outcomes look good for stocks. For bonds, in the longer term, if economies roll over, they'll do well, but in the short term, you've got the potential for significantly higher yields.
Garfield Reynolds, who leads our Markets Live Asia coverage here. Coming up on the Asia trade, we'll be hearing from CIBC on where crude prices may be headed next. A little bit of alleviation of that pressure in the markets at the moment. Talking market strategy with Vantage as well, plus Westpac giving us their outlook for Australian interest rates beyond today's expected hike. Much more ahead. This is Bloomberg.
Tomorrow, the Fed decides.
Here we go again. Jay Powell only has 2 more of these meetings on the calendar.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The potential risk scenario for the Federal Reserve is simply that they remain on hold for longer.
Certainly the Fed is no longer cutting.
Prices are going to go up. We might begin to see even more upside pressure on inflation from an already pretty bad starting point.
Is this too highbrow today?
Tune in to Bloomberg Surveillance. The Fed decides.
as I speak now, as a result of IEA action, additional barrels of oil are flowing to the market in Asia. And on top of those barrels being released right now, more and more are coming from IEA emergency reserves, both crude oil and oil products.
Yeah, the International Energy Agency Director Fatih Birol there with a look at oil supplies, especially those emergency supplies coming to markets. And we have already seen the price of oil decline in recent days, especially from their recent highs. This, as we have heard about a trickle of tankers being able to pass through the Strait of Hormuz, that has led to some optimism that we might see the market mobilizing again. Secretary Bessent has also talked about prices potentially being much lower than $80 a barrel in a couple of months. Let's discuss all of this with Rebecca Babin, Managing Director and Senior Energy Trader at CIBC Private Wealth Group. Rebecca, really good to have you with us. Of course, we have seen the trickle of tankers through the Strait of Hormuz. We saw the UAE's Fujairah port also reopening. But at the same time, we're getting news now that another oil field in the UAE, the Shah oil field, gas field, is halting operations. What's the picture right now in the energy space?
So I think you bring up two really good points, and this is what the energy market's really grappling with. On the one hand, we're getting some signs that there's easing through, whether it's through traffic through the Strait of Hormuz, as you said, a trickle, but directionally better than the direction it was going. We also get some rhetoric that there may be an off-ramp emerging in the background, while at the same time we still see energy infrastructure targeted. So there's this push and pull that's constantly kind of dragging the market higher and lower each day, just based on the sheer amount of headlines that are hitting. I would say today's action was reflective, as you said, about maybe the emergence of flows starting to move through the strait, some rhetoric that was softening. And lastly, as you mentioned on the lead-in, the barrels from the SPR potentially starting to be tendered in the United States, which caused traders to kind of hedge out that exposure. So it's not a one-story market. This is a market with about 100 stories running at once that's frantically trying to determine how much supply is off the market and for how long.
The how long is such a key question, right? Because you talked about the positive narrative around the flows, and a lot was based on potentially that Iran and Israel might be communicating as well. This is what the foreign minister of Iran, Mr. Araghchi, tweeted, saying that the last communication that he actually had with Mr. Witkoff in the U.S. also was prior to his employer's decision to kill diplomacy with another illegal military attack on Iran, that this was solely to mislead oil traders and the public. How difficult is it right now to gauge where the conversations, if there are any conversations between the two sides, are going, and what will traders be looking at when it comes to physical data on the ground about supplies?
So I think if I were going to put how difficult this is on a scale of 1 to 10, it's a 12. So figuring out what's happening as a non-military and DC analyst, this is all extremely challenging. But I think if we bring it back to the markets and we look at the supply picture, the market is keenly focused on two things. How much production is being shut in the Middle East? That number is growing. It was 4 million barrels last week. It's about 7 million barrels now, and that's before products. So we're looking at shut-ins and how long that crude is going to be held off the market and where inventories go from there. And as you said, time is the enemy here for volatility. As this extends out, the implications kind of compound throughout the market, making the supply disruption have a more pronounced impact on price. So that, I think, is where the market is focused, is where is that supply? How long is it going to be shut in? Are we getting any ships through? And with the rhetoric in the background kind of playing back and forth, maybe it causes a little bit of speculative money in and out of the market. But I think traders themselves are much more focused on flows than rhetoric. That doesn't mean rhetoric can't move markets. I just think for the pure crude traders, they're a little deeper in the numbers.
Speaking of flows, when it comes to the SPR release, how important is the flow rate here? And I thought it was really interesting that you also make the point that this is essentially borrowing from future supply too, right? Are there risks that perhaps we should be talking about?
So this is a great point. So the flow rate is really important. The most we've ever gotten out of a US SPR in 2022 was 1.2 million barrels. So we're going for 1.4 million if we listen to Chris Wright, who said we're going to release 172 million barrels over 120 days. It's around 1.5 million barrels. Hard to achieve, but possible. We're just not going to be able to get a bigger number out of the caverns that the oil's held in, just based on the logistical constraints. And I think the second thing you mentioned, which is we are borrowing from future demand, right? We're pulling demand forward, but that means in the back end of the curve, out in the end of 26 and into 27, because this is a loan or a swap agreement, those barrels need to be replaced. So it actually was very interesting to see WTI traded much heavier than Brent today because the front end of the curve was being hit by that potential supply, and the back end was lifting because that has to be replaced. So it's an interesting dynamic, and it lifts the back end of the curve, which is good for U.S. producers in the long run, but it doesn't necessarily solve our problem. Those barrels are going to have to be brought back.
I wanted to ask about some of the alternatives. One is Russia. Do you see more easing when it comes to sanctions on Russia and the ability to return more Russia oil to the market? The second is also China. The SPR there, we know that they've spent a lot of last year really quite aggressively building up stockpiles. Do we expect any action from that front?
So on Russia, I know that they've been given a waiver at this time of 30 days. Whether that gets extended, I think really is going to be, it depends on what happens with this conflict. It's hard to say. We know that there was about 30 million barrels off the coast of India at the time they got the waiver. So that's absolutely helping India and China fill this supply gap. I don't know what will happen in the future. There's obviously a lot of back and forth between the Europe and the US on how that plays out. But for now, we've got a 30-day waiver. China's super interesting. They've been building their SPR for the better part of a year and a half. They haven't released any of their reserves. What they've done is they've banned exports of product, right? So they're clearly in a mode where they're trying to conserve their supplies and keep a lot of dry powder in case this accelerates. They're really, really critical, though, in terms of if they do start to release and they lift the export ban on products, it would ease the market tremendously. But there are no signals right now that that's what they're going to do. And I would expect once this event passes, they will continue to be very active buyers anytime crude kind of gets in that 50s, 60s range to replenish their stockpiles again.
Rebecca, really great to have you with us. We appreciate your time and sharing your views with us. Rebecca Babin, who's the Managing Director and Senior Energy Trader at CIBC Private Wealth Group. More ahead on the Asia Trade. This is Bloomberg. Let's take a look across some other commodities, and this as we see that LME trading halt, quite a lot of action there as we see the trading restored after that 2-hour halt, really roaring metals markets. We're seeing a bit of upside when it comes to the last trade for copper, but we saw electronic trading halted in all contracts for more than 2 hours on Monday. You're watching the Asia Trade. More on our top story now, and President Trump says he has requested a delay to his summit with Chinese leader Xi Jinping for about a month, saying it's important for him to remain in Washington to oversee the Iran war. Earlier, Treasury Secretary Scott Bessent rejected speculation that Trump might delay the trip as a way to force China to help reopen the Strait of Hormuz.
I want to absolutely bifurcate that if the president's visit, and I'm saying if the president's visit is postponed, it would have nothing to do with the Chinese making a commitment to the Straits of Hormuz. It would obviously be in their interest to do so, but a postponement would not be as a result of any ask from the president not being met. The postponement, if it happens, would be because the commander-in-chief of the United States military believes that he should stay in the United States while this war is being prosecuted.
In the meantime, Chinese Vice Premier He Lifeng has urged the U.S. to completely remove unilateral tariffs during the second and final day of trade talks with American negotiators in Paris. China's state news agency Xinhua says he warned that Beijing was ready to take steps to safeguard its interests. U.S. Trade Representative Jen-Hsun says the two sides are considering a new mechanism to oversee economic ties. Let's bring in now Mara Rudman, who's the practitioner senior fellow at the University of Virginia's Miller Center. She previously held senior Middle East diplomatic roles in the Obama and Clinton administrations. Mara, really great to have you with us. And the narratives are myriad and fast moving at this point, but it was quite interesting that we did see at one point President Trump trying to draw in a number of countries and allies to help him, not with the war effort necessarily, but certainly the effort to try and restore energy security. And one of those sort of reach outs was directly to China. Is there anything that Beijing has to gain to become further involved in what's going on in the Middle East?
Probably not. And I believe that is a calculation that China is making. While all global energy markets are obviously affected, as Rebecca, who was on previously, described by what is happening with actions against Iran and with the closure of almost the closure of the Strait of Hormuz. China and Russia are two countries that are, if not benefiting, certainly hurting much less than all of the countries in the region, than Europe, than pretty much everywhere else in the world. Part of that with China is because it seems that they are still getting some oil from Iran, that the ships that are making it through the Strait of Hormuz are Iranian ships sending oil to China. So they don't feel the same pressure that other countries might. And even if they did, it's not clear that they would think it was wise to respond to President Trump's request, and I put request in quotes, in an affirmative manner.
Mara, even as we speak, we're getting more updates when it comes to the situation in the Middle East. We've seen an announcement from the UAE saying the airspace closure is a temporary closure of its airspace, according to the news agency there, the official news agency. We are also hearing that it's a, quote, exceptional precautionary measure that's been taken to close that UAE airspace. We know that even in the last few hours, we had the drone strike that affected the UAE gas fields and the suspension of operations there. So things continue to play out, even as there's a bit of alleviation when it comes to how markets are feeling about oil prices. But I do wonder, are we learning much more about where we're at in these operations, how close we are to any sort of conclusion? Is there any possibility for an off-ramp, because it doesn't seem like the two sides are getting much closer?
Yeah, well, I think it's not imminent, as in within the next day or two that we're on an off-ramp. But President Trump is clearly going to be faced with a decision, which is at some point to declare victory. He's already done that a few times, even as the fighting continues. But to give some reason to pull back, to take the exit ramp, as you say. But if he does so at this point, he's doing this knowing that he is leaving a not insignificant amount of highly enriched uranium that essentially is very close to, or is perceived by some as giving Iran and whoever remains in Iran a nuclear weapon capability. That, I should note, is because President Trump, that highly enriched uranium occurred because President Trump in his first term pulled out of an agreement with Iran, the United States, Europe, others, with Iran to restrict their enrichment of uranium. But so the decision he'll have to make is whether he continues going forward, puts U.S. troops on the ground in a highly risky situation to try to capture that highly enriched uranium, or if he finds a way to declare victory sooner, but leaving behind a very unstable situation.
Yeah, we're trying to sort of gauge what President Trump could call a victory in this situation when we don't necessarily know what the goal and justified strategy was, right, for this initial conflict. But have we seen any examples in past conflicts that perhaps could closely mirror to what's happening in Iran right now to sort of gauge how this could unfold?
So I'm worried about drawing parallels to past examples because each conflict has its own set of quite literally facts on the ground. But I think what we have seen with President Trump at any number of instances is a willingness and ability to shape facts to what he perceives as most useful to him. And so by saying that, I would say that, if he decides, and we've heard him use words about complete wins and victories. In fact, in the last engagement with Iran, he talked about the United States having obliterated their nuclear weapon capability, which is obviously not the case. But he could frame this in a way now, if he chose to, that would give the United States an off-ramp, open question on his ability to talk with Israeli leadership, with Prime Minister Netanyahu, about how and if they would pull back as well. So it at this point is very much in the framing in terms of what he does next and what kinds of costs he's willing to endure over the longer term if he stays in.
We're now seeing a president who has become boldly interventionist, right? We're talking about Iran. We're talking about Venezuela. President Trump now even talking about Cuba, potentially taking Cuba, talking about the need for their president to resign. How do global leaders take this in? And this is my question to you, as Prime Minister Takaichi is supposed to meet with President Trump this week on a very, very high-stakes conversation where the U.S. is asking them for maritime support to a pacifist country.
So my perception is that leaders throughout the world are wary, and for good reason. But I would expect that all of them are carefully calculating what they need the United States for, regardless of who's the leader of the United States, what they can do on their own, what they can do in alliance with others. And thus far, Japan's leadership has been, I would say, very savvy in how they have interacted with President Trump to have him feel like his interests are being served and yet also be able to manage their own. And I would anticipate that kind of interaction continuing.
Mara Rudman, really good to get your insights as always. Practitioner, senior fellow at the Miller Center, as we continue to watch the developments in the United Arab Emirates. We're hearing from the official news agency there that they have closed their airspace. This is an exceptional precautionary measure, so they're temporarily closing their airspace. Of course, we have seen now operations suspended at the Shah natural gas field in the UAE. Officials still sort of assessing the damage in that gas field. We have more ahead. This is Bloomberg.
This is the Asia Trade. As we continue to focus on private credit, these are some of the latest headlines. Morgan Stanley expects default rates in direct lending will climb to 8% as advances in artificial intelligence continue to disrupt the software industry. A note from a team of analysts say credit fundamentals of software loans are challenged, with the highest leverage and the lowest coverage ratios across major sectors. Global credit markets have come under pressure in recent months as investors assess how AI will dislocate the revenue streams of software companies. Officials at the Bank of International Settlements say investment in AI infrastructure via off-balance sheet debt is increasing the exposure of insurers and private credit funds to hyperscalers. The comments add to warnings about the debt frenzy to support the artificial intelligence revolution. With so many lenders lining up to throw cash at assets, the risk is that a bubble could eventually leave credit players facing substantial pain. Well, Alibaba is setting up a business unit to bring its sprawling AI services and development efforts under one umbrella, signaling its determination to profit from AI. Let's bring our China correspondent, Mimin Lo. So, Mimin, tell us about this latest revamp at Baba.
Yeah, so Baba is looking to bring all its AI products and services under a single umbrella to be led by the CEO, Eddie Wu. So this means that the flagship Qwen large language model and the consumer-facing app, its AI smart glasses, ThinkTalk, which is a Slack-like app for enterprises, all of that will come under one unit known as the Alibaba Token Hub. And that title suggests that the company is going to zero in on monetization, because a token obviously is that computing unit that Alibaba charges its customers. And the timing of this revamp is coming soon after a high-profile departure of the main architect behind Qwen, the main driver of Alibaba's transition into an AI company. His departure led to a lot of speculation among the developers community about whether more people would be leaving Alibaba as well. So this is the first sort of signal that Alibaba is clarifying its new AI strategy after the departure of that key lead engineer.
And of course, AI will also take a huge part of the earnings call on Thursday when Alibaba is reporting results. What are you watching?
So we'll, of course, be watching for any commentary regarding this new revamp and what it means for the company. We understand that it's supposed to sharpen the sales pitch to enterprise customers and to quicken interaction between different teams, from the developers to the designers. We know that Qwen, the company in the last year, had started to launch this consumer-facing app Tianwen, which is still lagging behind its rival ByteDance's Doubao, despite the company pouring in billions of yuan in red packets during Lunar New Year to lure in customers. So perhaps this revamp might draw more resources for Alibaba to go back to focus on its enterprise solutions. We also understand from sources that the company is looking to launch as soon as this week its own agentic service for enterprises running on the Qwen model and really capitalizing on the enthusiasm for OpenClaw. And eventually they will want to integrate this into their other apps like Alipay and Taobao as well. But to give you a sense of what Chinese AI tools can do now for free, have a look at this package that I produced when I was in Beijing.
这是真人还是人工智能？你能分辨出区别吗？
That almost looks like me, but it's not. It's an AI-generated video based on a single screenshot.
Tools from Alibaba, Tencent, Kuaishou are making AI video generation accessible to millions, sometimes for free.
Our company, I can't imagine without AI, how can we survive at the beginning? Without AI, I don't think our game can actually be done in 1 year.
It's brought huge productivity gains for this game developer, but also raised alarms in the entertainment industry. Disney and Paramount have accused ByteDance of IP infringement after its video generator produced near cinematic scenes from just a text prompt. The fear is that AI could replace not just mundane tasks, but jobs across creative industries.
The painting, if we use like labor works, it's like 2,000 to 4,000 for one piece. But with AI, we only use like probably 2 RMB for one piece.
For policymakers, the challenge is balancing growth.
We will nurture emerging industries and industries of the future
with disruption.
The rapid development of AI is having a profound impact on employment.
The China Economic Journal projects that more than 30% of urban jobs in China could be lost to AI by 2049. That's 142 million jobs. That's a scenario that could threaten social stability. Beijing is aiming to create another 12 million jobs this year, with just as many graduates set to enter an already slack labor market.
In finance and IT, if there weren't for this kind of regulatory barriers, about 30 to 40% of the job could have been lost right away. If you're thinking about the automation, AI replacement of junior roles is already happening massively in China.
That leaves Xi Jinping's government with a dilemma. China can't afford to fall behind in its tech race with the United States, but the implications of the tech revolution are far from clear.
If we let AI replace the jobs without taxing the AI appropriately,
then it can really get to the core of the consumer economy. And we got to think about sort of tax policy that is targeted specifically at what is driving those job losses.
It will be in the regulatory framework at some point. I just don't see it as a choice yet, because we're at the very early stage of promoting the application of AI. So the gray area must be capped, actually by a very wide margin.
Last December, state media published a landmark arbitration case in Beijing that set some early guardrails. Dismissing an employee because of AI is illegal because it's a business decision for profit, not an uncontrollable event. That means companies must prioritize retraining and reassignment before dismissing an employee. But for now, all signs at the two sessions suggest the government is going all in on tech at the risk of leaving some people behind.
So the idea for the story really came about because over Lunar New Year, a friend sent me a video of me wishing people Happy Chinese New Year in Mandarin, and it was entirely created by AI, and I was just shocked at how good the lip sync was, and I think people who don't know me would easily think that it was authentic. So I started thinking about, what this means for the economy, because there are entire industries that are being transformed, right? There are filmmakers making films now without actors, without set designers, and I spoke to some of the young people who tell me they're losing their jobs to AI. They're going back to school to try to gain an edge over machines and over other graduates. And it's a really tough environment for the young generation of people entering the workforce now. The universities are transforming their curriculum to incorporate AI as well. And I think it's safe to say in the next 5, 10, 20 years, the kind of jobs that would disappear from the economy and emerge, new jobs that would emerge, I think it would be beyond what we can imagine right now.
Yeah, policymakers are taking note, right? The IMF Managing Director Georgiev actually telling me that this would be a flood of change when it comes to the labor market. Mimi Lo with that report, Bloomberg's China correspondent with the latest on those AI developments, which, needless to say, have chips at the heart. Now, the war in the Middle East also threatening the global semiconductor industry. The conflict threatens to choke off key supplies vital for chip making and spike the cost of power. Let's bring in Bloomberg Asia tech correspondent Annabelle Drew with the latest. And Bell, not surprising given that, of course, in order to make chips, so many components, chemicals, materials go into them. What are we seeing?
Yeah, that's exactly right. I mean, Taiwan, and we're focusing on Taiwan here today, but it is an island that imports around 97% of its energy needs as well. It's got that vital, very strategic semiconductor industry. So securing a stable energy supply is absolutely critical for the overall industry. But this has really been a weakness, I guess, or a vulnerability that's very much being laid bare here, because even though we've had assurances from the likes of TSMC, government officials to date, and there's no cause for concern that's at least been stated publicly, of course, the risk is how long does this conflict drag on then, because the risks are certainly starting to mount up. I mean, last week we focused a lot on the helium supplies and how that's impacting chip makers in the region. But Taiwan also has some very specific energy needs when it comes to LNG, and LNG, of course, is the product that helium is then refined out of. We were discussing helium, but as I said, it's neighbours, Korea, Japan. I mean, Taiwan is a lot more vulnerable than those when it comes to LNG in particular, and that comes down to its supplies, because Taiwan has only got supplies for LNG for around 11 days of reserves. You compare that to Korea, where you're looking at supplies of north of 50 days. Japan rather has around 3 weeks of stockpiles built up. So it's a lot more exposed, even though the likes of Morgan Stanley, for instance, are saying that there's another few weeks of inventory of LNG that are bound for the island. Lots of concerns. Again, how long does the conflict spread down for, or spread on for?
Have we had a response from Taiwan's government?
Yeah, well, they've certainly made some changes off the back of that. So on the first instance, what they're talking about is just the amount of energy they have managed to secure at this point. So the government's been saying that they've got LNG supplies secured through April. It's also saying that the semiconductor industry isn't facing any sort of helium shortage, because when it comes to helium in particular, its semiconductor companies are able to look to other producers or other suppliers from the likes of Australia or the US, for instance. But officials have recognised that there is, as I said, a vulnerability here, and they've actually increased the statutory mandatory levels essentially from next year. So they're going to be raising that to 14 days from the current 11 days of stockpiles that I said that they had. And as I said, supplies of LNG, they're secured through April, but the government is also speaking with the US for supplies up through June. And then you're also looking at the crude oil situation. Again, another vulnerability here. They're saying they've got inventory until April. They are currently working on May shipments as well. But really, it comes back down to that semiconductor industry and how do they secure and maintain energy supplies to that industry, making sure, of course, the big thing is it needs to be stable.
Bloomberg Asia tech correspondent Annabelle Jewelers there with the latest. And you can actually get more on these big tech stories. The Bloomberg Video Hub is where you have to go. You can check out past episodes of Bloomberg Tech Asia and also other shows, of course. Bloomberg.com/videos is addressed there. And take a look at some of the stocks that we're watching as the markets open in Korea and Japan in just a few moments. Samsung, SK hynix already trading higher in pre-market after major AI chip announcements. Samsung has unveiled its next generation chip at Nvidia's GTC event, positioning itself as a key partner for Nvidia's upcoming AI infrastructure system. SK hynix also continuing to gain momentum in the high bandwidth memory race. Both Korean chip makers are benefiting from this surge in AI demand. More ahead. This is Bloomberg.
Watching Australian assets as we head into that RBA decision, which of course are not just for repercussions for Australia's economy, but could have some spillovers when it comes to global bonds as well. This is of course the first central banks to deliver a decision since the Middle East conflict began. This will be an early gauge of how global central bankers may respond to the stagflationary impact of higher energy prices coming through. There is a caveat, of course. The Aussie economy is a little bit different with those domestic drivers of growth. It is an energy exporter, less exposed to the broader energy growth shock from higher prices as such, but there has been domestic drivers of inflation to contend with, Shery.
Yeah, very different from the Japanese economy where we're expecting this week the Bank of Japan to hold rates steady, right? And we're getting the latest lines from the Finance Minister Katayama that authorities will do their utmost to respond to FX moves. They're considering the impact on people's lives. Of course, we do have that inflation rate higher than that BOJ 2% target for about 4 years. But what's really interesting right now, do keep an eye on those comments from the Defense Minister saying that they haven't received a specific dispatch request from the United States when it comes to helping unblock Hormuz. Of course, that's the big story right now unfolding in global markets. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens with some risk on sentiment coming from Wall Street. Haidi, all on optimism of that trickle of tankers that managed to pass through the Strait of Hormuz. But at the same time, geopolitical tensions around Iran continuing, the UAE just closing its airspace.
The implications of the continued war continue to rage on, right? And it's spilling over to some of these other events that we've been looking ahead to, including that leadership summit between Presidents Trump and President Xi of China. We've now heard that President Trump has requested a delay because quite clearly there's other things preoccupying his time at the moment.
The summit between Japanese Prime Minister Takaichi and President Trump this week seemed to be going ahead. We have heard from the chief trade negotiator that they're really following closely the negotiations. Here in Japan domestically, we will see a price cap or price subsidy when it comes to the energy sector. We have also heard from the Defense Ministry saying that Japan hasn't necessarily received a specific request from the U.S. when it comes to dispatching ships towards the Strait of Hormuz. Of course, local media had been reporting that this morning already. That will be a key theme of those conversations. In the meantime, we also heard this morning from Finance Minister Katayama talking about how authorities are prepared to deal with FX moves at a time when the Japanese yen was supported a little bit in the previous session because of some other comments by the Finance Minister herself, again trying to prop up the yen. But you can see right there, very close to that 160 level. So we are very much watching intervention risks in Japan at a time when we we do have the Bank of Japan policy decision as well, of course. The Nikkei gaining ground for the first time in 4 sessions. We'll continue to watch the tech sector because that was where the leadership was in the Wall Street session. A lot of news around Nvidia and their chip sales. And over in South Korea, we're seeing potentially that partnership between Nvidia and Hyundai as well around autonomous driving, how that will move that sector as well. Samsung, they just unveiled their newest, most advanced AI chip. So that's another thing that we'll continue to watch in this space. And you can see Samsung Electronics gaining already more than 4.5% right at the open at a time when the Korean won, yes, is seeing a little bit of strength together with the Kospi up 3% right there. But we continue to see it float around the 1,500 level. So Haidi, really the concerns around the FX space pretty broad across Asia, although we saw a little bit of more downside on the greenback in the overnight session. So we might see a little bit of support today.
Yeah, after so much of that extended rally as the classic haven trade continued to fuel demand for the dollar, right? But we have seen that those losses being extended alongside the fall in oil prices. But we are watching, of course, some of these Australian assets, given we are headed into the RBA's second decision of the year. They are expected to move again. There is a question, though, in terms of doing too much in such a fragile growth environment or doing too little and having these reflation expectations perhaps more firmly anchored given what's going on with the Middle East. But Shery, lots to contend with, and treasuries are also in focus now as we've seen a little bit of a reversal in that recent trade. But what the RBA does and what happens to Australian bonds will have that flow-on effect with G10 sovereign bonds as well.
Yeah, I mean, we have seen that global bond rally from treasuries to gilts to boons in the overnight session. We do have a 20-year auction here in Japan as well, so do watch out for those JGBs. But joining us now is Hebe Chen to unpack all of this. Senior market analyst at Vantage Markets Hebe. I mean, we saw a little bit more risk-on mood in the overnight session given the decline in oil prices. But how sustainable is this while the Iran war continues to rage?
Good morning, Anne. Thank you for having me. Yes, I think the oil prices seems to dominate all the headlines. And in the past 2 weeks, as you mentioned, the oil price has up about 49%. A little bit pullback, but still means that if you compare to about 30% 4 years ago when the Ukrainian war broke out, it means the market have largely priced into the supply disruption or the war premium for that. In terms of how high the premium could be, I think it's not just depends on what sort of price tag the market is willing to pay, but more about the duration or the runway for how long this rally could last. Because at this stage in the market, still focused on the supply disruption, the supply and the demand side of that. But on the other, further down the lane is that what sort of ramification, the ripple effect of that, because we know that ultimately oil prices will translate into a higher inflation, or even the worst case is deflations globally. And in that case, chances are we will seeing this extended rally that will putting more pressures on the global economy, and that could potentially sort of impact all corners of the financial markets.
And more pressure on central banks. I mean, this could lead to that tightening bias because of inflation expectations remaining elevated, right? We do have the RBA deciding today, also Bank Indonesia. We also have the Bank of Japan. Give us your sense of what the market should take away from central bank action this week.
Well, I'll start from RBA. I think in couple hours' time, we'll definitely get the 2 critical answers to the question from RBA. Number one is the central banks going to respond to the urgency or still keep as their pause as respond to the data? I think that makes huge difference. And the RBA, if they hike today or they push the bit further into the May, will tell us that which option, which strategy the RBA is choosing now. And as you mentioned earlier, this is the first central bank just after the Middle East tensions escalated. So how the central bank interpret this current risk, that will definitely translate into how the market will price in. Are we going to see more hikes? Are we going to see even more sizable hikes? All the messages that we could potentially determine if the RBA, for example, they're taking a more cautious and serious concern about this, the events that's taking the more serious credit into the oil price spike, the chances are moving forward, whenever the oil prices move up, whenever the tensions or crisis intensified, the market will translate into a higher bet for more hikes to come. And that's sort of the mindset that will dominate the market moving forward.
When it comes to China, you say this could be the biggest wild card, and there's even more uncertainty now being injected with potentially a delay in that leadership summit. What are you expecting from Beijing, given they have been fairly pragmatic and sort of stepping to the side with all of the geopolitical situations playing out?
Well, first, in the near term, I think a delay for the meeting between Trump and Xi, I think that's something that both sides wanted, because we know that when they're coming to the meeting, they do need something that both sides want more negotiation power on the table. And at this stage, given there's such uncertainty, both sides that do unclear about what they could ask for, what could kind of deal they could make out working out from the meeting. In terms of longer term, that's why I'm saying that China is the widest card, because so far in the past 2 weeks, given that China's quite strong relationship and the tricky relationship with both the US, Russia, and Iran, that China has been kept quite silent or quietly in the past 2 weeks. So we haven't seen China picking up a side or voice the support for either the US or the Iran. And this could be that means moving forward, whether or not any actions from China, is it economically, politically, that could become a biggest driver for the market movements, because there's so many things that we're just uncertain about what China could do about the current situation.
Where would you be going for opportunities and safety in this environment?
Well, I do see two opportunities. Number one is I think this is the best timing for every investors to have a health check for your portfolio, because what interesting thing for the past 2 weeks that's happening is we do see some of the safe havens doesn't perform as good as we expected. For example, the gold and silver, Japanese yen, the bonds. So if the portfolio, your portfolio or a portfolio that doesn't perform, that seems to resilient to the current crisis, the chances are you probably have to rethink about and restructure your portfolios, like given such an uncertain time. On the other hand, I think if you're moving a big step forward to the deep buying, I'm seeing that it's probably a time you can turn your eyes back into technology and Bitcoin, because surprisingly, these are the two assets seems to relatively resilient. If you compare the Nasdaq in the past 2 weeks, it's down about 2% compared to a 3% for S&P 500 and 4% for the Dows. And Bitcoin surprisingly up about 4% compared to about 8% down 4 years ago. So these are all the opportunities. I'm seeing that in the past 2 weeks are showing they're probably in a good position. When the war fire stops, they are probably the first one to rebound up.
Yeah, to your point on the strength, also in the tech sector, we've already seen that risk on sentiment and leadership come from the tech sector in the overnight session, right? Especially with all of these investments being made by hyperscalers, which always begs the question of, is there enough demand out there to justify all of this, which is leading to exposures in all different parts of the market, including private credit? Is this a concern down the line, or is Asia a whole different sort of landscape and dynamic when it comes to this shadow borrowing?
I would say that we know that everyone's getting a bit of a risk off at the moment. That's because we don't have much clarity of what's going to happen ahead. And in terms of that, all of the risks that potentially happening, they could potentially come into, we have the interest rate, high interest rate for long enough, and that damage into the economy, into the, for example, the private credit, into some of the assets, some of the corner of the financial market, they were potentially getting triggered even much more intensified because of the uncertain macro times. So whether or not they will spreading out into a even deeper issues, I think that we'll probably have to back into the first question we talk about is how long this crisis could last. If the crisis lasts even longer into a stagflation problems, I think that will bring us a playbook that everyone just unfamiliar with for a decades. In that sense, they will be the final and probably the hardest hammer into all this quite weak market at the moment.
Hebe Chen, always good to get your insights. Senior market analyst at Vantage Markets. And of course, as Hebe was telling us, we are very much focused on the tech sector right now. Already in the overnight session, we saw the optimism with Nvidia climbing on the fact that they're expecting to generate at least $1 trillion from Blackwell and Rubin AI chips through the end of 2027. We also heard from Meta Platforms agreeing to pay as much as $27 billion over 5 years for AI infrastructure. So You can see right there some of those Nvidia AI exposed names climbing at the moment. You can, of course, follow also what's happening with the shipbuilding side of things, because we continue to follow all of those trade negotiations on the backdrop of this ongoing war in Iran as well. And one of those conversations is between Japan and the United States, and how Japan plans to spend the $550 billion in investments that they pledged for the U.S. And we're now hearing from local media here in Japan that $100 million of those investments would be on U.S. shipbuilding. We have more ahead on the Asia trade. This is Bloomberg.
Tomorrow, the Fed decides.
Here we go again. Jay Powell only has 2 more of these meetings on the calendar.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The potential risk scenario for the Federal Reserve is simply that they remain on hold for longer.
Certainly the Fed is no longer cutting.
Prices are going to go up. We might begin to see even more upside pressure on inflation from an already pretty bad starting point.
Is this too highbrow today?
Tune in to Bloomberg Surveillance. The Fed decides.
I don't know. We're working on that right now. We're speaking to China. I'd love to, but because of the war, I want to be here. I have to be here, I feel. And so we've requested that we delay it a month or so, and I'm looking forward to being with them. We have a very good relationship.
President Trump on his request for a delay to his summit with China's leader Xi Jinping. Let's bring our chief North Asia correspondent Stephen Angle in Hong Kong. So there's been a bit of a question mark over if it was going to go ahead and I guess more specifically when it would go ahead, given all of the other distractions that President Trump has on his plate.
I think the prospects for such a summit were fraught, especially after, of course, the United States, along with Israel, sent missiles into Iran. And I think that's what's playing out here. I would not be surprised. I don't have any evidence, but I would not be surprised if He Feng, in their conversations with Scott Bessent and Jen-Hsun Greer in Paris over the weekend, concluding yesterday, probably issued some of those sentiments as well. It's just simply not the time to have a summit in Beijing at the end of this month and into early April, when the war in Iran is going on. And of course, we've all heard Donald Trump make those requests to China in particular, help aid in the safe passage of ships through the Strait of Hormuz. And that's something, of course, that China internally is probably discussing as well. But that's not something necessarily that they want to air on the global stage with such a high-profile summit with Donald Trump. Global Times, obviously the state mouthpiece, the state media, has dismissed Trump's call for China's help with the Strait of Hormuz as, quote, an attempt to spread the risk of a, quote, war that Washington started and can't finish. So clearly there's some messaging coming out of Beijing through the state media organs, but China overall has been fairly quiet about the whole situation. Now, Scott Bessent has been quick to essentially downplay that this delay is because or tied to Trump's asking for China's help in the Strait of Hormuz, whether that means military help as well. He's saying this is more due to the logistics of such a high-profile visit to Beijing at a time, of course, they are waging the war in Iran.
And Secretary Bessent and USTR Greer have been meeting their Chinese counterparts in Paris. There seemed to be some optimism coming from those conversations. Could the momentum be lost?
Well, that's the risk. Obviously, at the backdrop of these talks in Paris, which lasted a day and a half, is a gigantic elephant of the war in Iran. So again, they're trying to indicate that there is some momentum. I mean, Jen-Hsun Greer talked about they are considering a new mechanism to potentially oversee economic ties and manage bilateral relations or concerns. Jen-Hsun Greer likened it to a U.S.-China Board of Trade. But again, He Feng was critical of the United States, urging the U.S. to completely remove unilateral tariffs and other restrictive trade measures. So You know, there's a lot to get through on the trade front. Yes, we're in a truce that should last until December. Yes, they're trying to establish some sort of lasting truce on the trade front. But with what's happening in Iran and the overarching geopolitical concerns that Beijing no doubt has about what is happening in the Middle East, where China, let's face it, has vast economic interests throughout the Gulf region, those trade talks probably were a little bit stuck in the mud to begin with, and especially now that we're hearing that this summit between Xi and Trump, which essentially would formalize what those gentlemen talked about in December in Paris, they're probably going to have to push this can further down the road right now.
Stephen Engel, our chief North Asia correspondent there. And as Steve was just mentioning, President Trump has reiterated those appeals for help from other nations to secure the Strait of Hormuz, while threatening to expand strikes on Iran's main export hub. Let's bring in Bloomberg Politics editor Laura Davison. Laura, this is such a tricky situation for U.S. allies, right? Where are we at?
We're at a situation where Trump is asking for help, both from European allies, NATO in particular, he's called out, as well as allies in the Asia-Pacific region. He's specified China would like to come and help. Almost no one is taking him up on his calls. Zelensky, interestingly, is sort of the Ukrainian leader, is one of the few people who have said he will offer some sort of military support to the U.S. Of course, you know that Zelensky is very reliant on Europe and the U.S. for military support, so there's a little bit of tit for tat going on there. But Trump has found himself in a situation where he went to war, sort of at the surprise of many allies, and now is asking for their help, saying, trying to rise support. And people are just saying, look, we don't know what the strategy is here. We don't know what the end game is. We're not about to commit military troops, and Trump is getting angrier and angrier. We heard him say yesterday that, to Keir Starmer, that we will remember if you didn't support us here. So this is really getting personal, and Trump is very much taking this as his objective, and why isn't anyone else coming along?
Yeah, I mean, what do you call a victory at this point when you don't know what the United States actually wants in terms of getting something out of Iran? We don't even know if conversations are going on between the two sides. There's been a lot of confusion about the state of negotiations at this point. Geopolitical tensions continue, though. We heard the UAE airspace was closed.
Yes, Iran has really continued to hit, all the countries in the region where the U.S. has military bases. This is sort of the part of the strategy here is if Iran can put pressure on the other countries, if the U.S.'s allies in the region continue to make day-to-day life very difficult there for people, having their homes destroyed, not being able to travel, not being able to go out and about and effectively, sort of live their normal lives. They're hoping that those countries, UAE and others, can then put pressure on the U.S. Same with, European allies, Takaichi as well in Asia is headed to the White House. Their sort of strategy here is if you get allies to ask the U.S. to back down versus having to have these direct talks, they're probably able to get a better outcome here, and a swifter end to the war than trying to have prolonged negotiations with Iran, which Trump says he doesn't want to do, at least right now.
Laura, I do wonder, how is this sort of more interventionist administration or more interventionist president playing out when it comes to domestic attitudes in a midterms year? If there's not much care about that, then what about the impact on oil prices just before the summer driving season?
This is a strategy that has really befuddled a lot of Trump's allies, both sort of the political strategist class as well as in Congress. The most profile person to break with Trump is Marjorie Taylor Greene, who, was sort of a really leading voice in sort of the MAGA right. And she, has resigned from Congress, has really been critical of Trump's interventionist, really going back to the attack on Iran last year. This is, becoming an issue for Republicans. They are, all, at least in the House, all set for re-election, face re-election in November. Many senators are. Democrats have the upper hand historically. Going into these midterm elections, the president's party generally loses seats. So just at a baseline, it's already a bad environment for Republicans. Add on to that, you have a war that, is broadly unpopular within the U.S. People don't understand what the strategy is. Because of it, they're facing higher prices at the gas pump. That's compounding worries that already existed even before a couple weeks ago about higher prices for cost of living, groceries, energy, all of these basic costs. It creates a really, really poor environment, just at a time where, Trump is trying to drum up support, help his allies. He may find he is losing seats, losing majorities in Congress, which means that Democrats can investigate him and, frankly, make Trump's life very difficult going forward.
You have to feel for Americans right now hit left and right by these external foreign policies of President Trump, because we've just come off the back of the Venezuela issue with Maduro taken to the U.S. Then we're coming to an Iran war. And this is not just even remotely over. And President Trump is speaking about Cuba.
This is, Trump has taken a lot of, dare I say, joy in sort of some of these foreign conflicts. He really seems to enjoy being this presence on the world stage, using the military. He, frequently talks about the U.S.'s military might and all these cool tools that the U.S. military has. This is, really a risk for him because the U.S. Population broadly is not super interested in these foreign wars, particularly having things compounded. Trump had a pretty quick and swift success in Venezuela. That worked out pretty well for him politically. Iran is a whole different story. And then something else with Cuba that could really create, fighting multiple wars or having multiple conflicts. Trump, a couple weeks ago was sort of indicating that he thought Iran would go the way of Venezuela. They could get in, depose a leader, and sort of then have a new regime come in that's very friendly to the U.S. That is clearly not what's not happening here. And Cuba could be a very similar situation.
Laura Davison, really good to have you here with us in Tokyo. Bloomberg Politics editor, breaking down all of the latest geopolitical tensions around the Trump administration. More ahead on the Asia trade. This is Bloomberg.
Top global headlines that we're following, and the European Union said it is close to finalising a trade deal with Australia after years of negotiations. EU Commission President Ursula von der Leyen said that in a letter to leaders that talks were in the final stretch, and added that an agreement would be a milestone in diversifying the region's trade partnerships. According to our sources, von der Leyen may travel to Australia as soon as this weekend to sign the deal. US and South Korean trade representatives are set to meet in Washington this week to discuss potential investments in American energy projects and other ventures. According to people familiar with the matter, the talks will review potential investments under a $350 billion fund that was established as part of last year's US-South Korea trade framework. It comes days after South Korean legislators approved a new state-run vehicle to oversee these projects. Bank of America has agreed to settle a proposed class action lawsuit on behalf of Jeffrey Epstein victims who accused the bank of aiding in the deceased financier's sex trafficking. Terms of the deal were not immediately available. Any settlement must be approved by U.S. District Judge Jed Rakoff in Manhattan. A representative for Bank of America declined to comment. The bank has denied wrongdoing.
Asian currencies at the moment under pressure as geopolitical tensions continue around Iran. We had seen a little bit of a boost on the Japanese yen with Finance Minister Katayama coming out talking about authorities very closely watching and promising to take action on the FX moves. Right now, we're hearing from the Bank of Japan Governor Ueda speaking in Parliament, saying that the price trend is rising gradually. He's responding to questions by lawmakers on a week when we're expecting the BOJ to hold rates steady. Of course, a different picture for the RBA, where we're expecting that back-to-back hike coming from the central bank. The Aussie dollar has been supported. Do watch out for that. This is Bloomberg. We do have breaking news out of Singapore at the moment. We are seeing the non-oil domestic exports in the city-state coming in at 4% acceleration for the month of February. This is a smaller gain than economists had expected. It's definitely a deceleration from the revised number for the month of January of growth of 9.2% for non-oil domestic exports. Electronic exports remaining strong, gains of 43.2% year on year, but still a deceleration from the previous month where we saw gains of more than 50%. Now, electronic exports are very important for this economy, trade-driven economy, import-dependent economy at a very, very vulnerable time when it comes to the Iran war raging and really applying the supply shocks to the global economy. So we'll continue to watch these latest figures coming out of Singapore when it comes to their trade numbers, disappointing to the downside, Heidi.
Shery, really just underscoring the fragility, perhaps, of growth around the world at a week, in fact, where we're getting major central bank decisions to be made. We are seeing broadly Asian markets seeing that upside from the oil declines, that slide in energy prices, lifting stocks and bonds across the board, hopes that more tankers will be able to traverse the Strait of Hormuz. There are signals that wealthy nations could be releasing more stockpiles as well, all of that adding to sentiment. In Australia, we are seeing a bit of that reprieve from the war sentiment, but as months has been pretty typical. Energy now tracking the earlier decline in oil prices, mining stocks though leading the advance. It is also RBA day as we see that snapping of the 3-day losing streak. The RBA is expected to move, but of course that fine balance between the re-emergence of inflation pressures, not just globally but also domestically, and making such a decision to tighten in a pretty fragile global environment. When it comes to Korean and Japanese stocks, we're seeing the chip sector in focus, with the Nvidia event giving those related stocks a bit of a boost there. And the CEO, Jen-Hsun, says his company's AI processors will drive $1 trillion in sales through 2027.
I'm here to tell you that right now where I stand, a few short months after GTC DC, 1 year after last GTC, right here where I stand, I see through 2027 at least $1 trillion.
Well, Jen-Hsun made the prediction as Nvidia unveiled new products at its annual showcase. Let's bring up Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. So, Mandeep, what was your takeaway when it comes to the numbers that were provided? Does it change the narrative at all when it comes to growth expectations?
I mean, look, we are at pretty large spending levels when it comes to hyperscale capex. This year, it's going to be $650 billion in 2026. With this guide that Jen-Hsun gave today for $1 trillion in revenue through 2027, it pretty much implies we will see hyperscale capex growth of at least 30%. And we are coming off of a year where we will have 70% growth this year in capex. Next year, it's going to be at least 30%. And that's where Nvidia has that visibility to guide, through 2027. The question still remains for investors is how much of a pull forward does it imply? Because, that's the big risk that everyone sees with a company like Nvidia is when there will be a digestion period, and it's a question of, when and not if, there will be, a decline in EPS. This is not recurring revenue. And that's where, yes, an additional visibility for 2027 is a good thing. But then we still don't know what the growth may look like in 2028 and beyond. And that's why you see a muted stock reaction.
At least for now, the bullish news continue to trickle in, right? This time also from Meta Platforms and another huge AI infrastructure investment in Nebius Group.
Yeah, look, I mean, Meta is an interesting story. They could do up to a 20% layoff. Now, the question is the layoff because, the model is not catching up to the likes of OpenAI, Anthropic, and Gemini? Or do they see productivity driven by AI? I think it's more the former, and they don't want to cut their capex right now. Instead, they are going with optimizing their OpEx. And with Nebius, it's really a question of letting Nebius procure the power and the chips as opposed to, Meta building all their data centers themselves. So in Meta's case, it's unique in the sense they really don't have a successful AI product yet. And the hope is they'll be able to monetize all this AI infrastructure they're building. But right now, the 20% layoff is somewhat of an anomaly. You don't see that with other hyperscalers that are investing in AI like Gemini or Microsoft. So I think it'll be interesting to see how Meta plays out.
Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, always good to have you with us, joining us from New York. Now, another company repositioning around artificial intelligence, Alibaba. So watch it at the open in Hong Kong. Its U.S.-traded ADRs closed higher after announcing a major revamp where it will consolidate its AI endeavors under a single umbrella. Bloomberg Intelligence thinks the move could give Alibaba an edge. Senior consumer and technology analyst Catherine Lim. Catherine, so we're talking about the Alibaba token hub. How critical could this be?
Well, it's good to really see Alibaba reorganizing itself and focusing on, I guess, what will be the key question. when the company report results on Thursday. What are they doing to differentiate, themselves in this very competitive AI world? Now, we've actually seen some of the, personnel changes that has gone through. I don't think they are alone to actually see some of these changes. In fact, I think media has it reported that, AI-related jobs are the most sought after in China right now, and talents are scarce in this environment. So again, reorganizing this within themselves, and this is, I will stress, an internal organization. The last we have actually seen was actually back in November 2024 for the e-commerce business itself. I do think that with for a big company like Alibaba, with such a broad ecosystems across consumer as well as enterprise, this is a critical move and can really, up their edge against some of those platforms with narrower, reach within the space.
What are some of the challenges in these ambitions?
Now, clearly, I think keeping up with the developments, as Mandeep has actually earlier highlighted, there's just so many changes that goes on a daily basis right now. And really, the key is not just to keep up with it, but to make sure that, all the departments, especially, again, I stress, for a large, very deep ecosystem like Alibaba, they need to really work together. And if they are successful in actually, coming together, they will have a better edge at monetizing their products.
Bloomberg Intelligence Senior Consumer and Technology Analyst Catherine Lim there on Alibaba. Well, China faces a key test as the nation's AI boom reshapes industries while putting millions of jobs at risk. Analysts warned that up to 142 million urban jobs could vanish by 2049 due to rapid AI-driven automation. Our China correspondent Min Lo reports from Beijing.
这是真人还是人工智能？你能分辨出区别吗？
That almost looks like me, but it's not. It's an AI-generated video based on a single screenshot.
Tools from Alibaba, Tencent, Kuaishou are making AI video generation accessible to millions, sometimes for free.
Our company, I can't imagine without AI, how can we survive at the beginning? Without AI, I don't think our game can actually be done in 1 year.
It's brought huge productivity gains for this game developer, but also raised alarms in the entertainment industry. Disney and Paramount have accused ByteDance of IP infringement after its video generator produced near cinematic scenes from just a text prompt. The fear is that AI could replace not just mundane tasks, but jobs across creative industries.
The painting, if we use like labor works, it's like 2,000 to 4,000 for one piece. But with AI, we only use like probably 2 RMB for one piece.
For policymakers, the challenge is balancing growth.
We will nurture emerging industries and industries of the future
With disruption.
The rapid development of AI is having a profound impact on employment.
The China Economic Journal projects that more than 30% of urban jobs in China could be lost to AI by 2049. That's 142 million jobs. That's a scenario that could threaten social stability. Beijing is aiming to create another 12 million jobs this year, with just as many graduates set to enter an already slack labor market.
In finance and IT, if there weren't for this kind of regulatory barriers, about 30 to 40% of the job could have been lost right away. If you're thinking about the automation, AI replacement of junior roles is already happening massively in China.
That leaves Xi Jinping's government with a dilemma. China can't afford to fall behind in its tech race with the United States, but the implications of the tech revolution are far from clear.
If we let AI replace the jobs without taxing the AI appropriately, then it can really get to the core of the consumer economy. And we got to think about sort of tax policy that is targeted specifically at what is driving those job losses.
It will be in the regulatory framework at some point. I just don't see it as a choice yet, because we're at the very early stage of promoting the application of AI. So the gray area must be capped, actually by a very wide margin.
Last December, state media published a landmark arbitration case in Beijing that set some early guardrails. Dismissing an employee because of AI is illegal because it's a business decision for profit, not an uncontrollable event. That means companies must prioritize retraining and reassignment before dismissing an employee. But for now, all signs at the two sessions suggest the government is going all in on tech at the risk of leaving some people behind. Min Min Lo, Bloomberg News, Beijing.
You can get more on the biggest and most exciting stories in tech on the Bloomberg Video Hub. You can also check out past episodes of Bloomberg Tech Asia and other shows on Bloomberg.com/videos. And here are some of the top corporate stories that we're tracking. Hon Hai is projecting strong sales growth in 2026. After posting disappointing quarterly earnings, Chairman Yang Liu told analysts his company's AI server business will see strong growth this year. The Taiwanese company, also known as Foxconn, reported net income of $1.4 billion for the quarter ended December, trailing the average analyst projection of $1.8 billion. OpenAI is in advanced discussions to form a joint venture with private equity firms to bolster adoption of its AI software. Bloomberg has learned that the joint venture would have a pre-money valuation of roughly $10 billion, with private equity investors committing about $4 million. Sources say the firms include TPG, Brookfield Asset Management, and Bain Capital.
Listen, the former RBA Assistant Governor Luci Ellis gives us her outlook when it comes to today's RBA decision and beyond. This is Bloomberg. Take a look at markets pricing as we head into this RBA decision, of course. Key for a number of reasons, including it is the first major central bank to have to set policy since the start of the Iran war, and of course higher energy prices, just one of the factors that will be driving the RBA's decision, that fine balance between hiking again in what is a pretty precarious growth situation globally, but also the risk of not doing enough and potentially those inflation expectations being more permanently anchored. The swaps market is looking at this at the moment. It does look like there will be a part of the market that will be disappointed regardless of what that decision comes through as. Well, joining us now is Luci Ellis, who's a former RBA Assistant Governor and now Chief Economist at Westpac. And Luci, great to have you. And it's a nice time to not be at the RBA at the moment, or are you feeling a little bit of FOMO?
I was Chief Economist there during COVID. I feel for them. These are always difficult times. But it's been a long time. The last time that
we spoke about unprecedented times, and it's just kept going.
I think we just need to get used to the idea that this is a much more uncertain, a more multipolar world, and where big events are the things that always drive the environment and what the central bank has to react to, and those things aren't in their models. The pandemic isn't in a standard model. Wars aren't principally in their standard models. And I think the RBA is in a very specific position now relative to some of its peers.
So talk to us, with your unique insight, what those conversations, what the decision-making process would be like.
Well, putting myself in their shoes, they've already been worried about the resurgence in inflation that we've seen in Australia. And they're hemmed in to an extent by their view that Australia is really only capable of growing by about 2% a year. Now, at Westpac Economics, we're more optimistic about Australia's growth potential than that. But even so, we've had a genuine cyclical upswing in domestic demand, and that did pressure inflation a bit in the back half of last year. And so that's the environment that they're already starting with. And then on top of that, you've got this energy price shock, which has already fed into consumers' inflation expectations. And so the RBA is just in a position where it doesn't feel like it has room to say this is just a supply shock, we should look through it. In a few weeks' time, either the Strait of Hormuz will be open again and oil prices will come back down, and this was just a spike in prices, or the war drags on and actually what we're facing is a global recession, in which case tight policy probably also isn't the prescription. But at the point they are now, with inflation already above target, already deemed to be by the board unacceptable, in terms of the speed of the trajectory back to the midpoint of their 2 to 3% target range. They regard the economy as already being too tight and the labour market as being tight. And different people have different views about that, but putting myself in their shoes, and that's the view they have about the Australian economy. We think they are too pessimistic about Australia's growth potential, but given that is what they're thinking, given what they've seen with inflation over the last couple of quarters, that's the position they're in.
What about the inflation mindset? You spoke about some of the domestic drivers. How sticky are those inflation expectations, particularly at a time when there are still cost of living concerns, higher mortgage repayments?
Look, I think there's a lot of reason to expect inflation to come down from here, and that's our forecasts as well as their forecasts. There are a couple of reasons for a little bit of optimism. One thing we're noting is that the exchange rate has come up a fair way, and partly that's because of the increase in interest rates here and the change in the interest rate environment. But it's not all because of that. The US dollar's also sold off. That matters for RMB as well. And so there is some downward pressure on imported prices that the RBA might not have fully allowed for in their own projections. And that's just a risk that we're mindful of. And we also don't really see the pressures on inflation coming from domestic labour costs. Wages growth is relatively well contained. Unit labour costs are actually in a pretty good place. Productivity growth has lifted, but one of the reasons why we changed our view of what the RBA is going to do is the communication that's come out of the RBA in recent weeks saying, no, actually, never mind what happened in the fourth quarter national accounts. We effectively take no signal from that. We still think the Australian economy can only grow at 2%. We still think the Australian economy is tight. And that's the background that's informing their decision. And now, of course, we've got this energy price shock on top of that.
On the signals coming from the RBA, Luci, how do you assess these shifts in the policy mindset coming from the central bank itself? I mean, we have talked about how they went so fast from that easing cycle into now potentially back-to-back hikes.
Well, that's right. And in fact, based on what we're seeing, we think they'll probably go again in May. So that's a triple whammy, really. Essentially, they've been surprised, and indeed we were surprised by the resurgence in inflation in the second half of last year. And that happened after, previously inflation had, if anything, come down a little bit faster than they'd previously expected. So inflation had been in the target and then it popped back out again. And that's what they're reacting to. They're saying, well, because we've seen that, we infer from that the economy is actually still too tight. We infer from that the labour market is still too tight. And therefore, we need to be restrictive with policy, and we weren't 100% sure that we were restrictive on policy as at April, November last year. So they've had to backtrack on that. Is that the right lesson to draw from that scenario, or is in fact this a bit of noise, an unfortunate sequence of events that isn't necessarily telling you anything lasting about the economy and the capacity of the Australian economy? Well, we'll never really know now, because layered on top of this now we have this energy price shock.
I love this comment from Andrew Hauser. If ever there was a time when board members will earn their meagre salary, it will be this month. You expect a split vote, so not much.
Yeah, I don't expect it. I think it's a possibility.
Okay.
I think they will want a consensus vote, a unanimous vote, but I think there are good arguments not to go, and certainly talking some of the other counterparts in the market on the private sector side have said, well, actually, no, really, that we think they will go, but we think they shouldn't. I mean, I see our job.
This all sounds like it heightens the risk of policy mistakes.
Well, I think it, again, does come back to who is right about the supply capacity of the Australian economy. If they're right that, in fact, the labour market is tighter than full employment, if they're right that Australia can only grow at 2.1%, well, then what they're doing makes perfect sense. But there are different views about that. There is uncertainty about that. Our own view is it's something in the sort of mid-twos is sort of more appropriate. 2 and a quarter, 2.5 would be more appropriate. as a view about our trend growth and inflation. We've been much more heartened by the pickup in measured productivity than they have been. And I think there's been sort of too much emphasis, if anything, on over-interpreting sort of small bumps in measured supply. These are data sets that are not perfectly measured. The Bureau does a really good job in measuring the national accounts, but there are still revisions. We learnt in the last national accounts that actually the economy grew even faster in the prior quarters. There were data revisions that said actually the inflation you got with more growth than you thought you did. And I don't feel like the RBA has taken signal from that, but is that a policy mistake or is that just reasonable people can differ about that?
Luci, really great to have you with us. Luci Ellis, former RBA Assistant Governor and Chief Economist at Westpac. Subscribers can also turn to the terminal for more on that RBA rate decision. TLIV Go is your function. You'll get that commentary and analysis from our team. We have more on Australia Ahead every Tuesday at 11:40 a.m. If you're watching in Sydney, you can also tune into our Bloomberg Australia podcast. This is Bloomberg.
Keep an eye on the emerging market assets. They rose on oil declines and that risk on sentiment. We do have the Bank of Indonesia deciding on rates today. A hold is expected in order to support the rupiah, which has been relatively stable, likely helped by heavy intervention. Talking about intervention, the Philippine peso was also boosted after the central bank intervened, moving it away from that psychologically important 60 per dollar level. We do, in fact, have a conversation with the Philippine Stock Exchange's flagship investment conference, InvestPH Summit in Manila, with exclusives with the Philippine Finance Secretary, PSC, and SM Investments. This is Bloomberg.